Hello, welcome to S&R Properties Real Estate Market Report. My name is Rick Annunziata of S&R Properties. Today we're going to give you the latest update on mortgage rates and prices, something we're following really closely in today's housing market. We will also be giving you some local market updates, so make sure you watch the entire video. So let's start with this graph. And this is the Freddie Mac 30-year fixed rate from January of 2022, so very beginning of the year through where we are today. And what we can see is mortgage rates have been climbing drastically this year, and that's something we all know. This is what we've all been feeling. So look at that steep incline, and that's causing the cool down in the market right now. And so some people are being priced right out of the market. Mortgage rates have more than doubled this year, and that's never happened before in a calendar year. It's not necessarily just about that 7% number that we're starting to see. It's about the rapid rise. So this quote from Freddie Mac really says it well. It says U.S. 30-year fixed mortgage rates have increased 3.83 percentage points since the end of last year, and that's the biggest year-to-date increase in over 50 years. Now the good news is, and I think this says it well, and this is from Mark Fleming from First American, it says, while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. So we're not talking about mortgage rates doubling again. So what about a recession? Is there a recession around the corner? And this data from the Wall Street Journal is really helpful. So the Wall Street Journal asked economists, what are the chances of a recession happening in the next 12 months? And you can see it over on the left side of your screen. In January of 2022, only about 18% of economists said they expected to see a recession over the next 12 months. However, the latest data released in October shows that 63% of the economists now feel there's going to be a recession sometime over the next 12 months. And this is reflective of where we've seen the economy go over the past year. So what does that mean for the housing market? Well, let's keep in mind that a recession does not mean falling prices. So in 4 out of the last 6 recessions in this country, home prices actually increased. Now this graph does not mean we won't have falling prices, but it does mean that it doesn't happen every time. Now one thing we can learn from history is that a recession more than likely means falling mortgage rates, which you can see in this graph. In those same 6 recessions, mortgage rates have dropped each time this country has seen a recession. You can see here that traditionally mortgage rates have come down in recessions. So they've risen very dramatically recently, but what history shows is that at some point they turn. But what does that mean for prices? So let's take a look at this quote from Redfin. It says, for those bearish folks eagerly awaiting the home price crash, you'll have to keep waiting. As much as demand is pulling back, supply is as well, and that's reducing downward pressure on prices in the short run. So what does this mean? Well, this means houses are staying in the market longer. We're not seeing an influx of new listings, and this is continuing to put upward pressure on home prices. It's still a seller's market. Prices are driven by supply and demand. However, it's also giving more opportunities for buyers right now. So we're seeing that shift in the market. So what you're looking at here shows that foreclosures are not expected to rise. In fact, we are at a historically low rate of foreclosures, and I think that this is rather important to think about and to consider for buyers and investors alike. Now, I want to bring you the latest update we have on the home price forecast for next year. And what you can see here is that some experts are projecting a little bit of appreciation next year, and that's what you see in those blue bars. We have other experts that are projecting a slight depreciation. So it's across the board, a little bit up and a little bit down, depending on how the experts are looking at the data. And when we average these things out across the year, we're expecting to see flat home price appreciation nationally for 2023. So local data from Worcester County seems to support the national market trends. Our office is seeing weakening prices and more time on market for listings. Worcester as a whole has seen a decrease of 12% in sales and 20% fewer homes sold as compared to last year. And the supply of homes in the market is still rather low, which usually drives values up. However, we have less buyers on the market, and I would say we are still in a seller's market right now. but buyers do have more opportunities than they did a year ago. Home supply is still very low, and overall the trend is certainly for home prices to remain at their current levels, give or take. And we see the real estate market normalizing in the future. Now, the average time in market for houses in Worcester has increased about 14%, so we're definitely seeing a softening in the market, which fits the national trend. Now, where our office is located in Leicester, we're currently seeing a 7% rise in the number of houses for sale, and the number of homes sold over the last year is down 14%. The average days in market has actually dropped by about 5%, so homes are selling a bit faster than they were a year ago, but it's really negligible. Median prices in Leicester are $370,000, which is up 15% from last year. So we reported last year that prices in our area would continue to rise, and that's what we've seen. However, I would expect to see prices start to flatten out over the next year. But we're not going to see any real depreciation in values. Now, big banks are calling for more depreciation in home prices, but what's most important, and where they all tend to agree, is that 2023 will have a little bit of depreciation, but as we come into 24 and beyond, we're turning to more normal levels of home price appreciation. And that's really kind of the bottom line that we're seeing here. No one is calling for any extended, long period of depreciation right now. A little rocky next year and then returning to potentially to more normal levels of appreciation. So we're not talking about this long financial crisis ahead of us. We're talking about some up, some down next year, and then back to more normal levels as we look to nationally at that perspective across the board, moving into a much more stable environment. So I hope that this short market report gives you some information that will help you make informed decisions in your real estate needs. And if you're looking for a company to handle your sales, rental, or management, reach out to us at S&R Properties. We've been serving Worcester County for over 30 years out of our Leicester, Mass location, and we'd be happy to offer you our experience. Thanks for listening, and have a great day.